So last week I made a video on how to analyze EPS and EPS growth because it is a critical determinant factor when it comes to future stock price movement. In this video, I want to talk about sales growth. What are the characteristics in terms of sales growth for a leading stock? Or I should say, in the past 100 years of stock market history, whatever leading stocks were there, what were the characteristics they were displaying in terms of sales growth before they began their price advance? So, if you knew that, that would significantly improve your stock selection process. That would significantly refine your stock selection process. So, this data is documented in William O'Neill's book, How to Make Money in Stocks. So I want to make this short video about sales, but please understand that before you look at sales growth, the first condition, that is the EPS criteria, it has to be met. So you need latest 3 quarters of accelerating EPS growth. The EPS growth should be minimum 40%. These are the characteristics of a leading stock. Okay. Then the stability of the EPS should be there. On an annual basis, the EPS should be showing at least some positive growth, if not fantastic positive growth. Okay. So before we look at sales, we need to look at EPS. But this video is focused on sales growth. So let's go to MarketSmith. Let's look at a few companies. Okay. So here is, I put some filter here. I've given it a name. Let me randomly pick some stocks. Okay. Let me randomly pick some stocks from here. Now I'm not looking at red flags or anything. I'm just randomly picking. So I have picked 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 stocks. Okay. So let's look at these 10 stocks. Let's first understand what William O'Neill is saying in his book. So this is Genesis International. You go down, click on consolidated. Okay. You go down here. We are talking about sales growth. What William O'Neill says is that this number, the quarterly sales growth. So when you compare September quarter with the same quarter last year, so September 2024 with September 2023, if you compare the two sales number, this number should be minimum 25%. Okay. So when you compare September 2023 with September 2024, you get this growth number. Okay. Provided it has grown. Now that number should be minimum 25%. Okay, as per William O'Neill's book, because that is what he found. He did research on 125 years of stock market data, and he found the characteristics of a leading stock. And majority of those leading stocks were displaying this criteria where this number was minimum 25%. That's point number one. Point number two, if this number is less than 25%, okay, then at least it should be accelerating in the previous 3 quarters. So as you can see here, you have acceleration. So 9%, 53, 61, 117. So it is accelerating sales growth. Okay. So just two conditions. Either this should be minimum 25%, or if it is not 25%, if it is less than 25%, then for 3 consecutive quarters, there should be accelerating sales growth. That is what William O'Neill has said. So based on that, this stock will come under our leading characteristics criteria, provided the EPS conditions are met. Okay, so first priority always should be given to EPS. If EPS criteria is not met, okay, you can watch the EPS video. I have made it separately. That's the first priority because that's the most critical determinant. If the EPS criteria is not met, I would not even look at sales. Okay. So first the EPS criteria has to be met, then you come to sales. Okay. So assuming the EPS criteria is satisfied, but sales criteria does not get satisfied, in that case you would reject the stock. And assuming sales criteria is satisfied, but EPS criteria is not satisfied, in that case also you would reject the stock. Okay. So we need both basically. But first you need to look at EPS. So this stock, assuming EPS and everything is fine, this stock should be in our radar. Next, you look at Dixon, you go down, click on consolidated. Again, see, this is more than 25%. You don't even need to look at accelerating growth. Okay, here it is 25% and accelerating. So what else do we want? We are getting both. Okay, if we get both, it's like icing on the cake. Next, so Pudumji paper. So come down, consolidated. Have a look at this. 12, 12, 14. So this number is less than 25%, correct? So now it has to be accelerating. Now in this case, it is not accelerating for the last 2 quarters. Okay, it is flat. I would say last 3 quarters it is flat. The latest quarter it is less than 25%. So this is not a stock which should be on our radar. Moreover, if you look at EPS, it is declining. The growth rate of EPS is decelerating, which is not what we want. Okay. So before even looking at these numbers, I would look at these numbers first and I would reject the stock based on these numbers. Okay. If market conditions are weak, we need to stick to really fundamentally strong stocks only. And if this is being displayed, then I would not even look at sales. Another thing I want you to start questioning is if the sales growth is in small double digits, okay, if the sales growth is less than 20%, how can the EPS growth be 100%? Okay, how can the EPS growth be in triple digits? There is a problem, right? There is a disconnect. So maybe the company is growing the sales slowly. However, they are not booking enough expenses or they are not showing enough expenses for the profit to be in line with the sales, right? So maybe they are not spending enough on marketing. That is why the profit or the EPS is showing larger artificially. I don't know. You have to investigate further if you are interested. But just by looking at these numbers, I would prefer to stay away from the stock. Next, CDSL, click on consolidated. See, this number is more than 25%. I'm happy with that. Okay. This stock I would still consider uh, in my watch list. However, look at this decelerating EPS growth, decelerating sales growth 93, 72, 55, 105, 82, 49. Both are decelerating. This is not the characteristic of a leading stock. For a leading stock, you need companies where the sales and EPS quarterly, at least latest 3 quarters, both are accelerating. Okay. Next, have a look at this. Indraprastha Medical, less than 25%. So that means you need to see accelerating sales growth. Here you have decelerating sales growth 15, 13, 10. So it is not accelerating, it is decelerating. What did I say? Either this number should be minimum 25%, or if it is not 25%, if it is less than 25%, then at least the latest 3 quarters should be accelerating, which is not the case here. So this stock will be out of my radar. Moreover, look at the EPS growth. It is decelerating growth. It is not accelerating growth. Next, Gokul Agro. Now, this is a red flag. So I would not even look at the stock. I would not even look at the sales. I would straight away reject it. But assuming it is not a red flag, see, this number is less than 25% and latest quarter it has decelerated. So I would reject this. Okay. See, in a market where if the market is in a confirmed uptrend, okay, I might relax this criteria. I might only look at EPS. But in the current market conditions where the market is trying to attempt a rally, or if the market is in downtrend, or if the market is showing uptrend under pressure state, in those cases, my criteria becomes strict. So please understand that depending on overall stock market conditions, I have the freedom to choose how strict I am going to be with my filtering or screening criteria. The weaker the market conditions, the more strict I will be with my criteria. The looser the market condition, or The greater the market conditions, the less strict I will be with my criteria. Next, this is Piramal Pharma. I click on consolidated. Have a look at this 18, 12, 17. So deceleration and then acceleration. But this number is not more than 25%. So I would reject this stock simply on the basis of sales growth. Even if the EPS was great, I would reject the stock. Consolidated, see, this number is less than 25%. But see, deceleration from 19 to 7 and again acceleration from 7 to 24. We don't want to see that. We want to see accelerating growth in the latest 3 quarters. Okay. Again, healthcare. Click on consolidated. See 12, 14, 14. That is not accelerating. That is flat sales growth. Okay, growth is there, but it is flat. It is not accelerating. And this number is less than 25%. Again, EPS growth rate is decelerating. Not allowed. Okay. Radico Khaitan, click on consolidated. See, the number is less than 25%. See how easy it is to reject stocks just on the basis of sales growth. So, your job really becomes very simple when the market conditions are tough. Because when the market conditions are weak, you have to become more strict with your criteria. And the more strict you are with your criteria, the more stocks you are going to kick out. Okay. No matter what the base is, no matter what the relative strength is, no matter what is happening, I would reject these stocks. I don't want to take unnecessary risk. I am not saying you can't buy these stocks. I am just saying that if you buy these stocks, you are buying into something which does not show the characteristics of a leading stock. So your risk is high. That is what I'm trying to say. Please don't misunderstand me. When I say this is less than 25% and you don't see accelerating sales growth, straight away reject the stock. I am not saying that. I am saying you can buy the stock if you want. You can do anything you want. But you should be aware while buying that you are taking additional risk. You should also be aware that this is not a stock which is showing characteristics of a leader. So, probably, even if you get a breakout in such stocks, you would want to get out of the stock with a quick double digit return in 2 to 4 weeks. So, your trade management decision will also be based on these numbers. Okay. So I hope you understand what I'm saying. Just to summarize, this number September should be compared with September last year. Okay. And this number should be minimum 25%. If it is less than 25%, then it should be at least accelerating in the latest 3 quarters. That's the criteria. The more strict you are in any market condition, the more refined, the more high quality stocks will be ending up in your portfolio. Your portfolio will be a much higher quality portfolio than what you used to have before. Okay. So I hope this video has helped you. Thank you so much for your time. Have a fantastic day today.